Payday loans.
This is Jennifer. She had trouble paying her rent and chose to take out a payday loan of $375 to make ends meet. But it ended up costing her more than $500 in fees to do it. To cover her missing rent, Jennifer had a number of options. She could have asked her friends and family for money, but she felt embarrassed. Her credit cards were maxed out, and she didn't want to sell stuff or cut back even further on expenses. So Jennifer decided to take out a short-term loan because it seemed like a responsible choice. She's not the only one. 12 million Americans use payday loans every year. Who are they? They come from all walks of life. After all you need is income and a checking account to qualify. Like Jennifer, most payday loan customers borrow to cover routine living expenses like utilities, car payments, food, and rent, carrying the loan for months. But these loans are advertised as emergency short-term relief. Why the disconnect? Payday loans are also described as a way to avoid overdraft charges. The reality is that over half of loan customers end up overdrafting anyway, and a quarter actually cite the loan as the reason for an overdraft. Jennifer can't afford to repay the loan and keeps renewing it, ending up in debt for 5 months of the year, even though the loan was advertised as lasting only 2 weeks. This is typical, and many borrowers, 41%, have to use a cash infusion like a tax refund or help from family and friends to finally pay their loans back. When all was said and done, she spent more on fees than she received in credit, and she still owed the original $375. Eventually, she had to sell some of her stuff and borrow from her parents, which is what she thought she was avoiding in the first place. To learn more about payday loans,
Payday loans.